Welcome back. What a ride traders have seen on Wall Street recently. Currency, commodities, up 1 minute, down the next. Here with some good news and how to plan ahead is Joe Gallagher, investment advisor from LPL Financial. Joe, let's start with oil prices.
Sure.
We've seen them go down, which means our gas prices should as well, right?
Oh, man, it could be great for gas prices. We can see prices go down as much as 60 cents in autumn. You take the summer drivers off the road, you have the price of oil going down from $60 recently to $40 per barrel. Down from $100 a barrel last year to $40.
Is this connected to that natural gas boom we keep hearing about?
Well, it's connected to fracking. So fracking, you can do that with either natural gas or oil. I mean, so it's affecting all markets. And the big thing now is Iran. With the Iran nuclear deal coming in, once that hit, you saw oil prices drop by about a third just in the last couple of months.
So it could possibly, oil prices per barrel could go down into the low 40s, maybe the 30s by the wintertime?
Yeah, we're at the low 40s. So they're talking about 30s, low 30s being the natural floor for it. But what's going to happen is, you heard of all those new jobs, all the oil in Texas. Right. Those jobs can go away if oil prices get too low. It just gets too expensive to frack at that price.
So with the volatility on Wall Street, if you're planning for retirement, if you just want to have a safe haven for investments, we've seen gold go up and down, silver go up and down. Some of the things that are considered more stable have been volatile. What do you do? Well,
gold and silver is really the fear, because that's been historically where you go if you wanted to hide your money under the bed, but you see prices down by over 60%. So right now you're starting to see the movement start to react the right way. Stock market crashes, gold and silver goes up. We saw that intraday yesterday. That's probably one of the safer bets right now. You're worried about rising rates in the bond market, so not a lot of safe options out there right now.
What are some of the things that can actually stabilize such a volatile market? If you look at things historically, when do things start to level out? What are some indicators?
Well, a couple things. We're 6.5 years into a bull market, so one of the things that we normally look at is something to take the pressure off, maybe a 10% pullback, something of that nature, and some sort of stability in the interest rate environment. We keep on talking about raising rates. Wall Street's still looking for some sort of signal. Are we on a path, or are we going to keep on delaying?
It seems Janet Yellen has hinted that they'll go up, but it never seems to take that step, right?
Right, and this latest move with China devaluing their own currency, that might make us delay a little longer once again. So,
so that's going to be a continued change.
Right.
Any thoughts moving forward if you have an anniversary coming up or a date in an investment where you want to move something to a safer haven? Your advice is?
Yeah, so I mean again, you don't want to get too clever. You can move to a balanced fund, something that has both stocks and bonds if you're historically an aggressive investor. Or you could look at this point in time potentially at gold and silver. I mean, again, you're going to have to weigh out the volatility. Still a lot of risk there, but
we have to leave it there.
Thanks, always a pleasure.
Thank you, Joe Gallagher. We appreciate it. We're back on TV at 5 o'clock.
You've been watching WUSA 9 News with a weather forecast rated most accurate in the D.C. area for the last 4 years.